We find opportunities across EM spreads, rates, and FX, given the diversity and dispersion of countries, with our base case for moderate global growth. However, we're measured in overall risk-taking given uncertainties, including developing U.S. trade policies, unclear U.S. rate outcomes, and the evolving global power dynamics. Importantly, the investment thesis supporting the asset class is the attractive yield levels and resilient fundamentals. For EM credit, carry is likely to be the primary driver of returns. Elevated EM yields at 7.9% offer some of the highest yields across public fixed income. Additionally, EM continues to lead global growth, even when excluding China. We forecast EM growth to outpace DM growth by more than 2%. Historically, elevated starting yields and outpaced growth relative to DMs have been indicators of strong performance for the asset class. We continue to apply a bottom-up approach to allocating across countries as a global trade shock presents real risks that could drive reduced balance of payment flows. EM countries comprise a large share of global trade, and they're deeply integrated into the economies of their main trading partners. Our thesis of trade tensions driving a reorganization of supply chains away from adversaries and to allies will create opportunities. Identifying downside risks is critical, and we are mindful of accumulated debt levels. De-escalation of the wars in Ukraine and the Middle East could afford some relief to geopolitical pressures and provide a potential tailwind. In EM local markets, we're cautiously optimistic on EM duration and expect a wide dispersion among countries due to idiosyncratic factors. At the index level, we expect range-bound to slightly lower yields and steeper curves in the first quarter. Most EM central banks are at the end of their cutting cycles. Fiscal policy is likely to take central stage in many countries, and currency dynamics can also impact central bank policy. EMFX will likely be shaped by U.S. interest rates, Fed expectations, and U.S. growth. And in spite of the challenges, EM currencies could become more attractive as the year progresses. The beginning of 2025 will certainly make for an interesting time for the markets, yet our outlook for the emerging market debt asset class is encouraging, given the diverse opportunity set.